Welcome back. Still 120 points down on the index, fighting to hold that 25,900 mark. But it's big story time. Unsurprisingly, it's about the rupee, and our entire battery of research experts at CNBC-TV18 are here to take us through the impact that the fall in the rupee will have. But first up, Ritu, you have to tell us more about the rupee and the record low that it fell to in today's session as well.
Well, yes, it breached that 90 level psychological mark for the first time ever, hitting a fresh record low this morning. The rupee actually opened at 89.96, and within seconds, I think in less than a minute, we saw it crossing that 90 mark pretty much immediately. No RBI support really coming in on those levels as was expected. This sharp depreciation is almost 5% this year because capital outflows continue from the foreign investors. They pulled out nearly $17 billion this year, and that, of course, coupled with the strong dollar demand, we've been seeing the subdued domestic equities, which makes the market unattractive. And importantly, the lack of any progress on the US-India trade deal. We pretty much know the reasons that are weighing on the sentiments as far as rupee is concerned. And this pressure, experts we've been speaking to say will persist in the near term. But do keep in mind, we have adequate reserves. I think last was about $688 billion disclosed data. So, good for, of course, importers. For exporters, rather, not so good for importers.
All right. Not so good for importers. So what we'll do is then we'll find out about the sectors that benefit from it, the exporters, in particular the IT space, service exports. And that's the only index which is actually in the green right now as we speak. Rima joins in to tell us the impact alongside all the others who will talk about their specific sectors. Rima.
Thanks so much for that. So, before we get to INR depreciation, once again to reiterate that the Indian IT sector has been an underperformer. Year to date, the Nifty IT index is down 13%, though it started recovering from the 52-week lows. So from the 52-week low, the index has recovered more than 20%, but it's still down year to date. And from its all-time high level, Hormus told me it's down close to about 18%. So, one of the drivers for the sentiment today is the INR depreciation. Typically, the simple math tells you that a 1% rupee depreciation benefits margins by about 25 to 30 basis points. But then again, it depends on the kind of hedge ratio companies have. But, outside of that, one reason for the increasing optimism surrounding or why IT stocks and shares are seeing a look in is the underperformance, and also now the AI infrastructure. The global AI trade is moving from infra build out. They're saying eventually maybe that's going to peak out at some point of time. There is diminishing marginal utility, and the focus will shift to application services and maintenance. And this will unlock net AI revenue for the sector 12 to 18 months down the line. And plus, yesterday when we were talking to experts, they're saying assuming the Indian IT companies grow by 5-6%, plus you throw in a dividend yield, that makes it fairly attractive, and therefore it's time perhaps for to take a look in at the sector.
The only sectoral gainer in today's session is the IT index. Rima, thank you for that update. From IT, we move to pharma. Ekta, tell us more on that.
Well, yes, for when it comes to the rupee depreciation and pharmaceuticals, what the analysts have indicated is that it is a short-term impact. The impact of the rupee depreciation is positive, but it is limited. So that's because most of the Indian pharmaceutical companies hedge their USD exposure. Now, there will be a temporary gain in terms of realization of export sales, but there are input costs. So the equation for each pharmaceutical company depends on how much they do import in terms of input costs and how much do they export. So a lot of the companies who do have exports to the US will be benefiting from the rupee depreciation. Now, the input costs also will rise temporarily, but companies will be negotiating with vendors. Remember that the rupee has depreciated continuously over the past couple of years, and hence the pharmaceutical companies are quite well-versed in terms of the negotiations and in terms of the impact as well.
All right, let's go across to Sudarshan for autos. Sudarshan, those with a bit of an export bias will be happy.
That's correct. So while the auto companies or auto stocks are today under pressure, but there are certain companies or the pockets from the auto sector that will benefit the most from rupee's fall against US dollar. And first on the list is TVS Motor, because 30% of its total volumes come from export. And as far as revenue is concerned, exports form nearly 25 to 26% of the revenue. Second name is Bajaj Auto. Almost 50% of its revenue comes from the export segment. And in Q2 FY26 dollar realization was 87.1. So I did certain calculation. So in Q3, dollar realization increases to 89. And management today early in the morning has said if there is a fall of rupee 1 against US dollar, it lifts EBITDA, annualized EBITDA by almost rupees 200 crores. So you can do the calculation, what can the increase be. Now coming to auto ancillaries, I have taken three names. Samvardhana Motherson, Bharat Forge and Minda. Samvardhana Motherson, it would be a minor positive because 60 to 65% of their total revenue comes from the export segment, but they do have the manufacturing base in the US and Europe, so that will increase the costs as well. Coming to Bharat Forge, for Bharat Forge, 60% of the revenue comes from the export segment, and they have majorly three businesses. First one is Class 8, then PV EV components, and the last one is forging business, which is a high margin business. So Bharat Forge will be impacted positively, like hugely positive it would be for them. Coming to Minda, it would be a negative for them because they have the 70% of the revenue comes from domestic business. So now it will increase the import cost because they import chips and all the other components. That's the reason they are majorly dependent on the import, so it would be negative for them. So it would be a mixed impact, but majorly positive for few companies.
Take that majorly positive for a few companies, but a couple of companies their import bill increases. What happens to the oil and gas and chemical companies? Sonal joins in to wrap this up.
Well, let me start with oil and gas companies. It's going to be a mixed bag. Let's start with the oil producers. Of course, they will tend to benefit from this because their realizations are dollar denominated. So every 1 rupee depreciation improves EPS for ONGC and Oil India by 1 to 2%. For Petronel LNG, their regasification margins are linked to dollar, and that's the reason why they will improve their EPS by 1 to 3%. For OMCs, it's a mixed bag. They will see some imports as well, but yes, their GRMs, they are dollar denominated. So 11% improvement in EPS due to 1 rupee depreciation. For city gas distribution companies, it could be a negative because remember, they import a large part of their LNG, and that is something which would impact their EPS by 4 to 11% negatively. For chemicals, it's a huge basket, right? So can't talk about all the stocks, but some of them which have a large exposure to the US and they get dollar denominated revenues there, something like an SRF, we have Aarti Industries, Atul Limited, Naveen Fluorine, all of them tend to benefit because of the depreciation that we've been seeing in rupee.
Sonal, thank you for that and for summarizing all of it. And thank you to Reema, Ekta, Sudarshan as well as Ritu for taking us through the depreciation in the rupee and the impact on various sectors as well. The rupee at a new low, the index also making an intraday low 25,891 and now is staging a bit of a rebound from those levels. Take a short break, continue our conversations with the markets with Ashi Anand from IME Capital on the other side.